did see the euro surprisingly pull back quite a bit yesterday after we talked about the importance of this 1420 before, and this is actually where I thought that we were going to go to, at least initially, after the G20, but we languished around that 1361. We came up and we thought, we could potentially push hard, but I was surprised to see it fall this much. Obviously, also some of the Italy woes, and also this tightening with the spreads and the Bund, the highest it's been in quite some time here. It's probably generating some concerns as far as growth in the outlook here, and certainly that can weigh on the euro. It used to be that you could, kind of judge, certain highs and lows by looking at the Bund, although the Bund's been trading higher for a lot of different reasons, but this recent spike even further higher, the highest it's been in quite a long time, and I'm purposely kept it on the December Bund so we don't have a gap. We can see a little bit clearer picture, but look, it hasn't been this high in quite some time, and that probably has some concerns with with growth and a few other things, obviously the Italy situation, and that has weighed here on the euro. Obviously, there's been talk about the dollar working lower, and we came up here to this key area right here in the cash dollar we've covered before, right there, that 97.14. Remember how important that is on a daily. So we've edged back from there, although the euro hasn't rallied a whole lot, but it has come off of that 1320 area here that we had looked at before here. Gold has continued to remain higher. I was talking about the 1248 being a key area here on the daily. I mentioned that in the chat room yesterday, and also that I didn't think the euro would be able to go too far without that gold. Looking here on the daily, you can see right there, there's 1248, and there's that key. We went right to it, but we couldn't get beyond past that, but we haven't come that far off of the gold. And we'll take a look here on the 2-hour chart. We have come off, but you can see on that exponential moving averages, it's really based on the 30-minute. I've just kept in there just for general direction. And one of the things I was looking at in the Asian session, you look thinking this might even break further, but I thought, right there, you got this exponential, the slower exponential moving average, just going to provide some support. And sure enough, we've worked hard. We haven't blazed hard, but this market has surely acted like it wants to push even further. But that 1248 is very key on a daily here on the gold market. The dollar yen did end up playing out fairly well as far as the support here. Remember, we were looking at 1265. We'd even double the line here and just pointed that here and that. Sure enough, that support, I still think this favors more towards selling on any rallies, but that 1265 did hold up very well. The actual low was 1258, so the 1265 held up quite well, even when they retested it on the 2-hour. Found the support right there, 1265, before motoring higher. Cable has seen a nice rebound here. I know that JP Morgan had put out a story that they see now a 40% chance as opposed to a 20% chance of a no completion for the Brexit deal. So, but we've turned around and rallied right into that story. As that was posted about a couple hours back, maybe a little bit before then. And we've seen the dollar CAD also come back. We had the support down here and thought we might make it down to 3140. We've seen crude, ease back a bit, but still crude's holding up well. But one of the things concerned, obviously, the big story today, and you can see 32.97 is just right there, is the Bank of Canada. They won't be taking any action. And we've seen a pretty good run here in the bond market. We talked about that. Remember, we even mentioned the 143-ish think it even exceeded that. As there are concerns, let's take a look here on the bonds. We had, let's see, 4208. We even got past that. Look how we motored even higher here. Wow. All the way up here to this 4330. Amazing run here as these bonds have really garnered some huge short covering. We've actually rolled this into the March, and on the March there's that 43. So made it up just about to this 143. And we do need to go and move this into the March now. But a huge run. It's been a huge run. With that, we'll go on and move into the get into the stories, and also let's go on and take a look what we have on tap for today. Of course, at 9 a.m. Central Standard Time, which would be 10 a.m., the Bank of Canada rate decision, they're not expected to raise rates, and that certainly has weighed on the Canadian currency. Nothing here in the States of any real significant economic news. We did get German PPI, which came in just a bit weaker, but pretty much in line. Eurozone PMI, actually a little bit stronger than what they were expecting. And shock slide in UK services PMI points to a stalling economy. Wow, look at this. Now let's go move this out of the way. And the big news of the day, obviously, is going to be the Bank of Canada rate decision, and the Canadian dollar weakened against the greenback on Tuesday, paring some of its gains from the prior day as investors awaited a Bank of Canada rate decision and grew skeptical of the chances of a breakthrough in the U.S.-China trade talks. News of a 90-day truce in the trade war between the U.S. and China helped boost the loonie on Monday as investors grew more optimistic on the outlook for the global economy. But stocks fell on Tuesday as optimism faded. We certainly saw the S&Ps come off quite a bit here. But stocks fell on Tuesday as optimism faded over a speedy resolution to the trade conflict, and a flattening U.S. Treasury yield curve set off warning lights about slowing growth. We've been talking about that, and I think that's going to continue to bounce things around, but certainly going to be a concern looking out. Money markets and a strong majority of economists polled by Reuters expect the central bank to leave its benchmark rate unchanged at 1 3/4 on Wednesday, after it hiked the rate in October for the fifth time since July of 2017. Investors are reluctant to make bets on a loonie ahead of the interest rate decision and a meeting on Thursday of the OPEC, said Simon Harvey, a currency market analyst for Monex Europe and Monex Canada. The price of oil, one of Canada's major exports, paired gains in volatile trading as fears flared that the demand would stall due to the U.S.-China trade war and that Russia remained a stumbling block to a deal to cut global crude oil supply. And And the Aussie dollar suffers growth setback and bond yields hit year low. The Australian dollar turned tail on Wednesday as disappointing economic data further trimmed the chance of any rise in interest rates, while carnage in the global shares market combined to pull bond yields to one-year lows. Doing damage was data showing the Australian economy grew just 0.3 in the third quarter, half the pace forecast by analysts. Downward revisions to the past meant annual growth slowed just 0.2%. Today's result was underwhelming, said CBA economist Gareth Aird. Consumer spending remains a key risk given weak economic income growth and dwelling prices that look set to continue deflating in Sydney and Melbourne. Trend-like growth won't be generating much in the way of upward pressure on prices and wages. Monetary policy will stay unchanged for the foreseeable future. The Reserve Bank of Australia has already kept rates at record lows of 1.5% since mid-2016, and the futures market implies only a 1 in 5 chance of a hike by Christmas. The bond market had been rallying as concerns about a positive slowdown in the United States pulled Treasury yields sharply lower and inverted part of the yield curve. That drop had weighed on the US dollar until the Aussie was undone by its own poor data. Across the Tasman Sea, the New Zealand dollar eased to 69.30 off a fresh 6-month high of 69.69. An auction for dairy, the New Zealand's key export, did show the first rise in prices for 6 months, but economists warned it was unlikely to last. The New Zealand dollar finally found some decent resistance around 69.50. With global sentiment turning, it will likely struggle to push higher, says Miles Workman, economist at ANZ Bank. And sterling trims losses as the no Brexit scenario builds. Sterling recouped much of its overnight losses on Wednesday as optimism grew that Britain may not leave the European Union without a deal in place, though a broad sell-off in global markets weighed on sentiment. Prime Minister Theresa May's government was found in contempt of Parliament on Tuesday on the first day of the debate before a main vote on her proposed Brexit deal on December the 11th. The British currency fell sharply. A group of her own Conservative Party lawmakers also want a challenge to hand more power to the House of Commons if May's deal is voted down. That could reduce the likelihood of Britain leaving the EU without any deal. Formal advice from a European Court of Justice Advocate General suggesting Britain could also unilaterally withdraw its Brexit notice help ease some concern among investors about Britain crashing out of the bloc in March without a deal. JP Morgan analyst said the ECJ opinion raised the likelihood of the United Kingdom remaining in the European Union. In early London trading, the pound was flat at 27.40. Well, we've seen a pretty nice rebound back almost to 128. And JP Morgan did go on and push that story out. Dollar pressured by falling U.S. yields and recession fears. Well, we actually saw a rally in the dollar. That's the thing. While they were talking about that, the dollar kept rallying. We've since started to pull back a little bit as the euros kind of worked a little bit higher from that 13.20 area here. The dollar edged up on Wednesday, but remained under pressure as an inversion of part of the Treasury yield curve caused concerns about a possible U.S. recession. The greenback has enjoyed months of unrivaled performance against its peers, but that could be undermined by growing concern about slowing U.S. growth. Those worries on Tuesday saw 2-year yields rising above those of longer-dated 5-year notes for the first time in more than a decade. The so-called inversion of the yield curve to many investors sounds an alarm about looming U.S. economic slowdown. In that initial phase of the inversion of the yield curve, markets are worried and react more aggressively to weak data than to strong data, said Masafumi Yamamoto. I think the dollar can be in a correction mode in yield curve inversion environment, he added. Against a basket of rivals, the dollar index edged up 1/10 to 97.10, trimming the losses to 2/10. It was 6/10 off at a 17-month pick at 97.69. And we've talked about the importance of, on the daily, of this 97.14. This is where they ran out of gas here on that daily, and now we started to pare back a bit. The recent weakness in the dollar comes against the backdrop of a temporary truce in the U.S.-China trade conflict over the weekend, which has bolstered investor confidence in riskier currencies versus the safe haven greenback. The dollar has been under pressure since Federal Reserve Chairman Jerome Powell said last Wednesday that U.S. rates were nearing neutral levels, which markets interpreted as signaling a slowdown in the pace of rate hikes. Without a resolution on the European Union's dispute with Italy over its proposed budget or Euro-specific positive developments, Eurodollar is likely to trade in a range of 112 to 116, said analysts at Commerzbank. But that's a pretty doggone wide range, though. The Aussie plummets. The Australian dollar slumped more than 7/10 against the greenback as disappointing economic data further dimmed the chance of a rise in rates. The Aussie moved sharply off of a 4-month low of 73.94 hit earlier this week. The Aussie, often viewed as a barometer of Chinese growth, had risen earlier in the session after China's Commerce Ministry said a statement that a Chinese trade and economics delegation had held a successful meeting with the United States. Against the yen, the dollar rose 0.2 to 12.97, calling back some of the previous session's losses when it booked its biggest one-day drop since July 20th. And as I noted here, we were looking at 12.65 on the bias chart, and that's where they actually ultimately held. I mean, they went as low as 12.58, but when they came back here to test, it was 12.65 that held the deal, and we rallied back up. But still, it's going to be safer to be, as I said yesterday, a seller of the dollar yen. U.S. stock and bond markets will be closed on Wednesday for National Day of Mourning for former U.S. President George Bush, who died on Friday. So that'll certainly temper, I should say, some action. And the 10-year German government bond yields fall to the lowest in over 6 months. Germany's 10-year government bond yield fell to its lowest in over 6 months on Wednesday, feeling the effect of a flattening U.S. curve that is stoking fears of an economic downturn. And like I said, we haven't, and why I haven't rolled over to the March, because I don't want to have any gaps. I mean, I want us to be clearly to see what's been going on. And look at this bund now with and I couldn't stress enough yesterday how important that is about these U.S. yields, and we'll continue to see them move even further higher, as we saw, and I'm talking not higher, but the actual prices, of futures, which obviously the yields are going lower, saw them even run up even higher yesterday, even beyond what we had a resistance. And look at this, look at the year, the bund continue to move higher, and that certainly played its part with pushing the euro lower. Used to be, as I said, a couple years back, you could actually look as the bund would move back and forth, you'd get a run up in here. You knew that the euro was going to be near its lows. You could probably buy the euro, and the same thing inversely. You'd see the same thing as, when you saw a move down here, okay, the euro's probably made its stretch here, and you could, offer the euro or exit positions. But right now, we're just on a run path, and there's concerns about growth. And we already know that the Eurozone, there were already concerns. Now, we got some better PMIs, so that's helped lift us off of this 1320. But it's something that you really have to keep your eyes on if you're trading the euro, and also even these other pairs. That's why you saw the Aussie even pull back. Anyway, getting back, the Germany's government bond yield fell to its lowest in over 6 months on Wednesday, feeling the effect of a flattening U.S. curve that is stoking fears of an economic downturn. Risk sentiment is also being hurt by waning optimism over the U.S.-China trade talks and a series of setbacks over Brexit, all of which have combined to halt Monday's global rally, which was driven by optimism over trade. The gap between Germany's 2- and 10-year bond yields narrowed further to 85.7 basis points, the tightest in 7 months. And parts of the U.S. Treasury yield curve inverted for the first time in over a decade, hitting at recessionary expectations. European equities opened around 1% lower, while both the bid for safe haven assets pushed Germany's 10-year government bond yield, the benchmark for the region, to its lowest in 6 months. There's been a huge flight to safety in the European bond market, but equities closed on Tuesday only modestly lower, while there were sharp falls in the U.S., said Martin Van Villay, senior rate strategist. Other high-grade Eurozone government bond yields were also around 1 basis point lower. More turmoil on the Brexit front is likely after Theresa May's government was found in contempt of Parliament Then a group of our own Conservative Party lawmakers won a challenge to hand more power to the House of Commons. U.S. equity futures were firmer after China expressed confidence on Wednesday they can reach a trade deal with the United States. However, President Trump warned that he would revert to more tariffs if the two sides could not resolve their differences. U.S. markets are closed on a day of mourning for President George H. Bush, providing a welcome pause in the sell-off. Italy holds despite trio rumor. Italian government bond yields slipped to 2 to 3 basis points, despite reports by Corriere della Sera that European Minister Giovanni Tria is considering resigning once Parliament approves the 2019 budget. You know what? That makes a lot of sense to me. I'd buy into that, because why do you want to stay in that mess? European Commissioner Gunther Oettinger looked to add further pressure on Italy to lower its proposed budget deficit to 2019. He said even a deficit goal of 2.2% of gross domestic product would be against all the commitments. Yeah, because really they should be, really I think it's supposed to be 1.9. Tria said on Tuesday the government is weighing additional asset sales next year to cut debt as it seeks to settle a dispute with the European Commission over the budget. I think the Italians are really stuck in a tough place now, and they're going to have to give more, but I don't think the market's in a sense of giving it much credit, even if they do. I think they have no choice but to continue to cut back. Italy's 10-year government bond yield opened 3 basis points lower at 3.12. It spread over the higher rate of Germany tightened to 2 basis points at 286. And lastly, with gold, gold pulls back from a 5-week high as the dollar edges higher. Gold prices dipped on Wednesday, retreating from more than 5-week top hit in the previous session as the dollar crawled higher. Gold is mainly tracking the U.S. dollar, said Brian Land, managing director of dealer Gold Silver. Today's move in gold is a correction because yesterday prices were up quite a bit. Gold prices should have taken support from this, but it has not, and it's talking about the yield going to the lowest spread. As inflation comes down, crude oil prices have come down. These positive and negative factors are holding gold at the same level, said Renishi Chainani, head of commodity research at Monarch. Concerns about weaker growth have stoked bets the Federal Reserve will end its campaign to raise interest rates. Federal Reserve Chairman Powell said last Wednesday U.S. interest rates were nearing neutral levels, which markets interpreted as signaling a slowdown in rate hikes. President Trump on Tuesday held out the possibility of an extension of the 90-day truce with China, but warned he would revert to tariffs if both sides could not resolve the differences. So he's looking at an extension now, but we're not really seeing much give in the equities. I mean, much play in the positive side. Normally, you would expect a better outing from gold, given the absolute beatdown in stocks. But this is a baby step for the precious metal, Samit Kumar Gupta, portfolio manager. Gold at this point will correct a little more. 1242 is a level. Gold is tested before as it goes up to the next level. So that's what I'm saying here. You know, we're pulling back here in gold. And let me get back this out of the way. And you can see here, pretty good solid level here. They've tried to come up to this 1248 a couple of times, but even the pullback has only been slight. You know, we talked about this. Let's move this out of here. Yeah, I posted that in the chat room yesterday morning is, you know, hey, we've got that resistance there, 1248. And that's pretty good solid resistance, and that's on a daily, okay? So it's going to have a tough trying to get beyond 1248, and then as it struggled, that's what I was indicating, hey, the euro's not going to be able to go anywhere. Gold has actually been the one that's been leading the euro, not the other way around. I know they were saying focus on the dollar, but gold's been one actually doing the leading. Actually, that even took place since it probably started around Thursday or Friday, and it's even played into Monday. And obviously, as gold started to weaken, and not a whole lot, boy, the euro really came off, on which I said had a lot more to do with what was happening here in the bunds, and that just continued to move higher, and some concerns obviously for growth. As I said here, when you look on the exponential moving averages, and really I just generally use it for direction, but I tell you what, when it came down, it looked like, oh, we could probably, you know, drop down to maybe 1235, 36. But I was looking at this in Asia and I go, wow, you know what, that's probably going to provide some support. Don't get excited on the downside trying to stay with this. And even on the pullback, it really didn't want to give too much. I mean, once again, as much time as you spent up here, and this is a 2-hour chart. It's not like as if it's a 30-minute. look how much time we spent there. You would expect a pretty good sharp pullback or a test to test down here, probably to 36. But we had the support coming in here, and this market surely acts like it wants to push higher. It's really holding its own here. But let's go on and move on to the buys chart. Now we had the support here in the euro for 1364. And it looked like we could even try and push higher when we were pushing up against that 1420, and it was just hanging below 114. They tried to make one more push. They couldn't get beyond it. This was quite a bit of a surprise here when we slid. Kind of yes and no. Technically, yes, and even kind of disrupted what looked like a rather positive movement, and we could start to work higher. But once again, sometimes fundamentals can overwhelmingly weigh, and fundamentals in the sense of what's happening here with the bund. Once again, I spent a lot of time yesterday talking about, the 30-year bond. I myself don't look at the 10-year, but I like to look at the 30-year. But that being said, we've got the inversion already with the 5-year. I posted that story about 2 weeks ago about how the importance of the 5-year, and we were seeing a big change in the 5-year, and that was like 2 weeks ago. And obviously now, finally they lit the fire and things went a little bit bananas. And so we've continued to see. Already we had seen moves here in the Bund because of what happened with Italy, and each day there's a little bit of news and they back off, but you got this big move here to 61.60. Okay, so we gap lower, and as we gap lower, look, this thing turns around and takes off even higher. So you're thinking here, okay, now we're going to finally, now you see it was all overdone. Now we're going to gap lower and move higher. People start to take shorts and think, oh, well, this is a good area here, and this is a good area here, and then we just start blazing higher and higher. And that certainly took its toll right here with the euro and helped push this thing even lower with growth concerns. Now we're up higher this morning off of that 1320. 1320 has been key, but we're off higher. We had some positive PMIs, bit of a surprise. So it's offered a bit of a reprieve, but we have certainly gone and done some damage here with the euro. Looking at this, it's going to be that two-step, I was going to say before, 3 steps forward, 1 step back. And now it's more like 2 steps forward, 1 step back. And Powell's going to be speaking. That may offer a little bit of reprieve, but, I don't think I think we're going to be stuck in these ranges. We're going to have to figure out what's going to really happen. And how much this is going to be impacted, because they have that concern here. Now, it's crazy. Now, that's one of the reasons I had, at the time, stayed with the December, so you can see it more clearly. But you can see, remember how these markets completely fell apart, and the bonds were selling off, and there was no reprieve whatsoever. And now, look at that. We're just taking off like gangbusters as people get out of those positions and drives the momentum even further. And we saw that momentum, if you remember, back in only just a few months ago, when you could the 30-year bond couldn't find a bid to save its life. Now it's the complete opposite. And we have those concerns for growth. Like I said, we got a reprieve with the euro this morning. Got some decent a little bit of a surprise to the upside on the PMIs. Now, where do we stand? How have we changed the complexion here with the euro? Let's go and take a look where we stand here with the daily. And we had the chance to try and jump up. Something would have to materially change. I know that we might get a reprieve with Powell, but something would have to change, because we're kind of stuck here on a short-term basis. We're not going anywhere until we take out this area here, which is simply not. I mean, that would offer, but right now just above, right there, 1403. That would be key just to get us out of this stuck in neutral. But we would need this close above, right actually here on a daily close, 1453, to get things starting to motor higher. And I just don't really see the catalyst, especially going to the year now. Yesterday's action was really disappointing. I think we're just going to be back and forth in it for now at this point. So 1403 would be huge on the daily. If we could get past that, I think that's going to be key. In some ways, I think that the dollar may ultimately, be able to pull back. Like we were talking about that, being able to edge back. But I think it's going to be, in some ways, in light of what happened yesterday, it's going to have a tough time as we go into the year end. I think it might be more ranging than anything else. So when I look here at the euro, I'll tell you what, this one is tough now. Right there's going to be resistance, 1396. 1396. You'll have some resistance at 72, but to try and push, it's going to be right there at 1396. And I think it's going to be, you have these layers now of levels. I think it's going to have a very tough time now. We just may see a lot of back and forth trading. You may see some spikes like NFP, but I think it's going to be, this one has me scratching my head, but I think even on spikes, you're going to have people taking profits, and you'll see this thing pull back in, whether it's to the downside, popping back up, or to the upside, coming back in. So I'll go with 1396. For support, and it's pretty clear where the support is, and that's at 1320 area here. We'll call it right there, which is 1320. And I just think that we're going to be stuck in a range. I think that where things start to look pretty good, I think this threw everything out of whack here, this bun. And the reason I'm saying that, because although we had that story, I don't think anyone saw this coming. I thought we would get to a point with a bit of a slowdown, but like I said, so I thought bonds could start to ease back. We mentioned that since last week, that bonds were starting to move higher, and concerns about the dollar yen, how could move higher, because ultimately I thought the big message would be we said about that, all about the ZBs we used to say, but this jump up here, look at this, from 139 to 143, that's 4 full points. If that's not a game changer, I don't know what is. That's what I'm saying is, a nice little rally off of these lows. And to put this in context, a little bit of rally off of these lows, but look right here. Okay, now we test up. Okay, we get it to 40. Maybe we back down a little bit here, find a little bit of support, and start to work hard. This thing just zoomed. Look at this. We get past this area here, about 39.5, and then we turn around and rally for almost 4 full points. That is an absolute huge move. And it's kind of shaken. It's somewhat shaken the market here. Obviously enough where we sent the S&P's finally listened to it, and they're starting. The story is they don't think things work out of China. Let me tell you, a lot of this has to do with this whole thing of the recession thing. And if that's the case, then stocks are overpriced, would be the thinking overall. So I think that's what's thrown everything into a little bit of where things started to look bright, where the euro could move higher. Things kind of got flipped around with this whole thing. And certainly the Italy thing doesn't help matters either. But now I'm seeing some stories out where the European Commission is going to try and make the euro more, even more used. I could look at it, but more prominence in the global trade, and they're doing everything they can. Actually, they're playing it from the smart side. They're actually not waiting until the house is on fire. They're starting to take some action right now, and this could be, I think, everybody's getting a little bit concerned on this. We've had such a good run in equities. I don't want to talk too macro, but you're getting some concerns there, and I think that's why for right now into December, we might just be kind of stuck in that this bund really threw things in the bonds too, really threw things off a little bit. Maybe we'll be able to pop up, but I'm not so sure now about these moves back up to 116 as of yet, at least not till we get past the year. We'll see what happens with the Powell thing, but it's going to be on the downside. It's going to be 1320. When we're looking at cable, we had 28.58 and 27.59 yesterday. Well, we've made this move up in here. We may see quiet trading now as we have on a U.S. holiday at this point. Resistance right now is going to come in right there. We're tightening everything up now. 28.22 as we move into tomorrow. That's 28.22. And support right now is going to come in right there, 27.20. You see it right there coming across, 27.20. This has got to be one of the toughest markets to trade. I really believe so, because, I mean, unless you see something like this where you got this little gravestone doji here, you see here, something like that, you can go and take the other side. And it ran pretty good, but I tell you what, it's a tough market to trade. Very tough market to trade. And let's go and move into the Aussie dollar. And now what you're now finding is the same thing with the Aussie. Looked like everything was looking, pretty good overall. But now it's the global growth story that's grabbing everybody's attention, or the possible, obviously they mentioned here in the States with the inversion, but hey, I don't think they're talking about a recession in Australia, but you're getting those concerns and how they're impacting outlook for central bank rate hikes. And so they're like, oh no, that thing's gonna be put off. Well, if that's the case, then you end up seeing this market pare back. And then maybe the whole thing about the China grabs more attention now, and instead of the glass looking half full, now it looks half empty. And I think that's kind of like what we're dealing with now overall. On the Aussie, as far as support, let's go and take a look. I think we can slide. And you have to look, because that's the way the momentum's playing. You may see a pop back up in here, and we'll see once we hear something else from Powell. But ultimately, I think the market's going to have to work down to the 72.50. I think that's, I won't say it's baked in the cake, but I think that's where we'll go into 72.50. Even if we pop back up here to 73.25, ultimately I think we'll end up testing the 72.50. So that's going to be our support. You can get bounce backs, okay? So maybe get a bounce back in the Aussie, but here's the deal. The way I see it, we're probably overdone here in the bonds. No problem. But people are going to be trying to pick up this on the way back down. Okay, so I don't think anybody's going to be saying, wow, I can't wait to short it. They are overdone. There's no doubt about that. But we move lower and lower and lower, and people aren't going to be saying, oh, well, where's the next opportunity to short it? That's kind of like what I talked about with the yen. It's going to be dollar yen. It's going to be a lot safer, even though we had support yesterday at 12.65, and that ended up holding. we said it's going to be a lot safer to be a seller on rallies. Well, it's going to be, well, same thing here with the bonds. When you see this market move nearly 4 full points, people are going to be looking at how to pick it up on dips as opposed to how to sell it on rallies. So that being said, same thing here with the Aussie. I think, and this whole thing about that the markets, got the good news out of China, so to speak. We reacted, and I think it reacted for good measure. Okay, but I think people are going to say, well, wait a minute, not so fast. They're not going to be raising rates, and maybe things aren't going to work out so well. So maybe we need to see a little bit of a pullback. And so I think that pullback would take us to the 72.50 on the short haul. Resistance is going to be right there, 73.37. Right here. So on any, Powell gives some comments. I know he's supposed to be coming up soon. I think maybe as early as tomorrow. Yeah, you can see a bit of a rally. The real resistance is going to come in right there, 73.45. But I think that the market would look to sell that if it makes it up there. So we'll go with 73.37. And really only because I think they'll want to let this thing come back down here and digest some of these gains. So we're going to go with 73.37. And let's go move into the Kiwi. We've had a fabulous run here in the Kiwi, and it's still very bullish. But oh man, I think same thing here. I think we may have gone a little bit too far. Resistance at this point, keeping it pretty tight. 69.39. That's only 20 pips away. 19. 69.39. And this would definitely have to change, at least at the very least to neutral at best, or range. Only because I think here on the Kiwi, we've had a pretty good run. And when you have uncertainty, I think people are going to keep their hands in their pockets. And so I don't see where the market's going to go a whole lot higher here. And support then would come back in right there. It's not even that far away. Let's go right here. 68.61. 68.61. Can you look at that? It's got to go to 68.40 just to get to the 23% pullback. So that's what I'm saying is here. That 68.61 is fairly decent. You'll find some support there, but I would expect this to go on and have to slide further back. Let's go and move into the dollar CAD. Now, this is going to be the mover today with the Bank of Canada rate decision. We actually made a pretty good run up in here. Obviously, went past the 32.38, but right here, this 32.97. How much further they can push it? I don't even see why they'd even be thinking about raising rates at all. So let's take a look here. I'd much rather think that I wouldn't be getting in the way of this thing. It wouldn't even surprise me if they come back here and try and challenge up in here. They may not make it all the way, but like I said, I don't think this whole thing with this slowdown talk, I don't think anybody's looking to get in the way of it. Resistance. It's going to be right there at 33.35. But I would let this thing settle down. I'll tell you what, if they get above 33.35 and then get a 2-hour close below 33.35, you can see a little bit better ease back. But this thing has rallied pretty strong, despite crude oil finally starting to move higher. So up here, I'll put this right there, 33.34, 33.34. Support is going to be right there, 32.28. But this is, I would think, probably more apt to even try and push it up a little bit higher. And then we'll may spend part of the day kind of digesting it and pulling back in here a little bit. But you have to be, like I said, this whole growth story and possible slowdown is going to keep the markets off keel for a little bit. So I would I would think that it'd probably be a couple of days. We try and figure out where the direction is going to be. I don't have a good take on this right now. We've really come quite back. And I think they could even push it even a little bit further before they try and digest. We'll see. I'm going to be watching. It'll be interesting to watch, just simply watch it. But certainly I don't think it's going to be resolved within a day or so. I think we could push up even higher and then languish in here as the market tries to figure out what it wants to do. But it'd be 32.28 on the downside. Sometimes you'll see big events take place where sometimes you hear people say, "Oh, this is a game changer. This changes the complexion." Look, when bond markets move like this, that's a real game changer. That's a game changer when they move like this, okay? And it's from a technical standpoint, wow, we gapped lower and then we turned around and blew right through it, and not just by a little bit, by a lot. And so this is what's going to be on people's minds, and you have to kind of keep that and let that digest. It's not something that digests over a day or two. And why I spent a lot of time talking about it yesterday. And we saw a continuation of the move, and why we ended up seeing the euro really come back down. I didn't foresee that happening, but I'm saying is when this boom, it really put that pressure on there. Moving on to the dollar Swiss. Well, we had the 90. We moved it just a hair higher, 99.89, but obviously with the dollar strength, that we did move beyond that, so we made it all the way up in here. And there's my 99. Well, actually, look, there it is. I think I only had it down here. So resistance on a short haul basis, I don't expect a whole lot. Is right there off of this one. Well, they almost made it there. Par 06. Looks like they made it as high as par 05. So it's going to be par 06. This is interesting here. For right now, there's going to be support there. Let's call it right there. 99.26. 99.26. That's on the daily. And let's move on to the dollar yen. Okay, I thought we had 12.65. Well, we had 12.66. 1 pip's not going to make any difference, but that ended up holding here. But my concern once again is I'd rather be a sell on a rally than trying to pick up any dips. Though that held, that was a good area to go and cover shorts, as we had mentioned. But I think we were up in here at the time. But I thought that 12.66 would hold. It did. We saw a rally, decent rally, was 50 pips off of that, or nearly 50 pips. Resistance at this point is going to be right there, 13.25. And all these resistances are going to be a little bit tight now. Overall, most of them, not all of them, but it's going to be 13.25. I'd once again much rather be a seller than a buyer here. That 12.66 from yesterday, I'm going to stay with this because I think that 12.66 will work like as a pivot. So if we break below that, then we can move towards this 12.21. So we're going to go on and keep the 12.66. And I think this is going to start to turn to bearish. And let's move on to the cash dollar index. Well, here we are back to this 97.14 as this market is just hanging around. That's important on a daily basis. We actually even closed just a hair above that, but the market has since backed off from that. You can see right there we closed it. What was it? 97.18. But the 14 is what's key because they quickly start to lose it. So we'll keep that, the 97.14. Certainly didn't expect this to be right back up here or made that trek there. And look, here we are back to our old friend 96.84, which has probably allowed the euro to probably stall a little bit up in here. This is the support here. 96.84, I'm just apt to say right here because that's been a huge level. But holiday trading, I mean, not holiday, but I mean, we're no use trading as far as bonds and banks close, equities. So we'll allow this if they want to press it a little bit lower. Right there, 96.74. 96.74. Not much further from where we're at right now. And moving on to gold. Well, we had a resistance at 1248, and that's where they stopped. Or they stopped, I think it was 1247.40. But they're still holding up fairly well here in gold. talked about the importance of this level here, and this is on a daily. Pretty huge if they're able to get past it. And certainly the market looks like it wants to get past it, but and we've only backed off just a little bit. And let's take a look here. I think it's a testament that as much time as they spent here, they could have easily have said, wow, okay, look at this. This would have, this shows you how strong I like that the exponential moving average here is that I would have thought once we got past that, look at how much it struggled trying to get above 1248. It just couldn't do it. So I would have thought something like this, then like this, then like this. This is a testament that it's still holding up so well. That's what I'm saying is you would have thought, okay, coming down at 1236 probably made some sense. You see what I'm saying? And when I was looking at this in the Asian session, this kept me from trying to ride this thing lower. Because I looked down like, you know what? Because it hadn't even made it here. There, yeah. But I said, you know what? That's actually holding up pretty well. I go, this is probably where they're going to try and find some support. And look, they're holding up, they've come back up and they're so close. And certainly the moves in interest rates certainly would buoy the gold market. And you look like it wants to go much further higher. That's why I'd be very careful. I wouldn't be trying to take the other side. Even when I caught a couple of nickels against this, but even then it wasn't wanting to give. I mean, you're looking at it and it didn't want to give. And finally when it did give, it didn't give a whole lot. And I'm thinking, okay, now it's going to pump back here and now really come down to 36. Not that it's going to come apart, but they would come down there and find some new buying. I'm thinking, wait a minute, this slow exponential moving average is holding right there. They may just try and find the support. And sure enough, it's held. I mean, it's quiet trading, but then again, we've got a U.S. holiday today, so I think it's holding up really well, and it certainly looks like it wants to, just like we talked about the dollar yen. Remember how we talked about the dollar yen about a week and a half ago, how it wanted to resolve itself higher, which we were talking about. Remember the time we were talking about 1389, and eventually it not only made it to 1389, it was made it to 1417 or something like that. This feels the same way. It wants to resolve itself higher. How much higher? Well, on a daily, there's a 1260, but let's try and take a look here. I really think it's 54.30. Eventually where they want to get to before you kind of see this market pause a bit. But there's 54 and 58. So on a short haul, we'll say 48 because that's still there. It hasn't even taken it out. It came close. It came 60 cents within taking it out. But I think it wants to go to 54. I mean, you blow stops and go to 54, and be careful because it can jump up to 58 too. But 54, I think, is where this 54 is reminiscent to me of 1389 in the dollar yen we talked about. And it made it to 1389, then it went to 1412. Well, this thing feels like it wants to resolve itself higher, and I would not even try and get in the way of this thing because resolving itself higher might really send this thing blasting a little bit higher. Certainly recessionary concerns aren't the type of thing to push gold higher, but the thought that, a couple of things here. We've already had a pretty good pullback down in rates, so really gold should even actually have been higher. Probably should have already taken out 1248. And I thought yesterday they would probably, I knew the resistance was there at 1248, but I thought they might pop up above it and then dip back below it. So really, if you think about it, if you think about where rates are, U.S. rates, we should be even higher in gold. So it's probably a little bit disappointing they weren't able to goose the stops. But I think we could make it eventually up to here to 1254. So it's going to be 1248 on the short haul and 1237 right there on the support. So no change there. We're actually almost out of time. So let me hurry up and get going here. We've rolled into the March. Resistance for now. It's going to be right there. 42.16 with support 41.11. Quickly go to the bunds. We're over time, but I thought it was important to really stress some of the importance here with these rates and its impact on really across the board. 62.28. Support's going to be right there, 61.82. Right there, 61.81. I'll show you. 61.81. And DAX. Boy, what a mess. I'll move a little bit higher. It's going to be 11,178. And right there, 11,312. Sorry I didn't spend much time on that, but we've already run out of time. And I know they got to get prepared for face. Okay, and thanks for joining us here on the European Crossover webinar.